Are the Federal Reserve about to enact emergency interest rate cuts in response to what's taking place in the stock market? That is on the front of everybody's minds today. In fact, Trump himself is very much calling for that. The stock market is selling off on the back end of the announcement of tariffs and the fears around economic growth on the back end of all of this. And there's really two paths ahead of us. There's the path that tariffs get literally implemented, and there's in fact potentially escalation like what we see coming out of China taking place, or tariffs actually do the opposite of what the markets are pricing in right now and everybody is expecting, and that is actually result in lower tariffs across the board. Now, I'm more optimistic that that's the scenario. I don't think people should shoot more holes in the bottom of the boat, certainly whilst it's afloat. However, we're still yet to see a resolve, and the markets are very much going with the more doom and gloom, literal implementation of tariffs and escalation scenario. Now, with the stock market's reaction, the Federal Reserve are becoming increasingly under pressure because they've historically reacted to stock market moves. I'm not convinced that they should do that because that does show some real cause for concern. And I'm still asking and trying to answer the question, is all this warranted, or is this just a major overreaction? Now, for many of you out there, this is going to be a very hard day, hard week, hard month or so as a cryptocurrency investor. But I've lived through many of these, and as a net buyer of cryptocurrency assets that I think are truly going to play a role in tomorrow's world, whether that be enacting or enabling the evolution of money, which is stable coins, or tokenizing the hundreds of trillions of dollars that are going to come on chain, or enabling a better AI system, the Internet of Things, whatever it may be, the Internet of Value more broadly. I'm a net buyer, and days like today are an opportunity depending on how you look at them. I think I can come out today a little bit easier than many just because of how well we're positioned in regards to the cryptocurrency space. You know, we're still largely hovering above break even in regards to the kind of 2 years of accumulation that we've been doing of crypto assets. And I do see today as just another opportunity that will surpass once certainty in regards to the macroeconomic conditions or context has been given, of course, of which there's none right now, whether that's from the tariffs, whether that's from the Fed. There's multiple different paradigms going on, and what you typically tend to find in that situation is people hold on to their money, and that's at a time with liquidity being restricted by the Federal Reserve. So I just wanted to get that out there. Guys, you're going to be fine. You are truly investing in one of the greatest opportunities I think humanity has ever faced from a market point of view. However, we could be 180 degrees wrong on that. We're yet to see. So let's get into it all, guys. We've got a hell of a lot. I wanted to start with that because there's always a lot of panic, always a lot of uncertainty, always a lot of fear, and rightfully so. But we've got a hell of a lot to get into. We're going to look at what JPMorgan's asset manager, Bob Mitchell, had to say on all of this in regards to what he thinks the Fed are going to do. Obviously, Trump tweeting at Jerome Powell once again yesterday. We'll look at how interest rates are adjusting and shaping up. Some people now pricing in 5 interest rate cuts this year. The 30-day federal fund futures rate really saw a jump up last night. It will likely see a continued jump up in today's open. I knew we were in for a nightmare when I looked at the futures market open. Yes, last night I was just like, oh, crypto's not going to react too well to that. And it did hold its ground very well on Thursday and Friday. And we did say could be a full sense of security. Bill Ackman hitting out at Howard Lutnick. Then we'll look at the Bitcoin price to put everything into context. We'll talk about the $1.4 billion worth of liquidations that took place within the cryptocurrency space, majority to the long side. Stop playing with leverage, ding-dongs. You deserve to lose your money. And I've been doing this for years. My advice, and it is advice to people, if you're going to invest in the cryptocurrency space, stick to being spot long. Don't play around with futures. Don't play around with options if you can get your hands on them. Anyway, and then we're going to take a look at, of course, CoinShares digital asset report. So hang in there, guys. Let's kick things off with some news out of Donald Trump, who, of course, he is the hot topic right now, but he's, of course, isn't the popular topic. And I think, at least initially, we have been very on the side of Trump and what he's looking to do. Not in all arenas, but more broadly. And as of the markets right now, they're very much disagreeing with us. Now, whether that's the result over a longer arc of time. So we're talking by the end of this year, wherever we, his term, we'll see. But right now, he and his policy are certainly to blame for what's taking place. Predominantly, there are, of course, other elements. So this is from the White House. And it says, or we'll just read Trump's, this would have been on Truth Social, I believe. Why he doesn't just come on Twitter as well, I don't know. Or I do know because he's got his own platform. Oil prices are down. Interest rates are down. The slow-moving Fed should cut rates. Exclamation mark. Food prices are down. There is no inflation. We're about to get CPI on Wednesday. That's going to be interesting because all of this data is going to factor into the bigger picture. And the long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abusers of them all, China, whose markets are crashing, just raised its tariffs by 34% on top of its long-term ridiculously high tariffs, plus not acknowledging my warning for abusing countries not to retaliate. They've made enough. For decades, taking advantage of the good old USA. Our past leaders are to blame for allowing this and so much else to happen to our country. Make America great again. This is the route or the reasoning behind what's taking place in the cryptocurrency markets, but the markets more broadly. We are just along for the ride, guys. I still honestly don't think, certainly if you're an accumulator of crypto, the past couple of years has been a bad time, depending on what cryptos, of course, you've accumulated. Like I say, we're still not doing too badly, despite probably the price action that we've seen for markets, certainly the equity markets being some of the worst I have lived through. In a short succession, we're talking days, Obviously, I've lived through the March 2020 spill. 2018, of course, was my kind of baptism of fire into being a crypto investor. But this is very much to blame for everything. And in regards to interest rates, there is some movement in the federal funds 30 days interest rate futures. So this is pricing where the Fed funds is going to be 30 days in advance. This actually had it down at 4% and it's kind of came back up. So this is somewhat on the back end of the market action we're seeing in the stock market. Increasing the probabilities of cuts. Traders fully price 5 Fed fund rates cuts through 2025. And of course, the CME has now increased the probabilities that they cut in their next meeting, which is to take place next month. We're going to look at what JPMorgan have to say in regards to an emergency rate cut. Then moving forwards, you can see cut probabilities are increasing. I almost think if you look at the historic playbook of when shit starts to hit the fan, the Federal Reserve cut rates, it continues for a while to fall. So I kind of almost don't think that them reacting to the market action, although they kind of need to in some regards, although do they? I don't think them cutting rates is the best move because it does show some concerns. But then again, might give some reassurance in regards to monetary policy, which they very much not said anything on moving forwards. Let's now dive over to what JPMorgan have to say about all of this. Certainly the Federal Reserve, them cutting interest rates and things potentially breaking more than they already have.
Michael, the global head of fixed income at JPMorgan Asset Management, writing this. Both the administration and Federal Reserve are behaving as though the market moves are business as usual. We cannot believe that the Fed will wait until something breaks before responding. Bob joins us now for more. Bob, good evening.
Happy to be here.
GFC.com, the pandemic. Frame this moment. What is this for you and the team?
Well, I was reading Larry Summers earlier, who pointed out that Thursday and Friday were back-to-back the worst market drops, except in 3 other instances. The 87 stock market crash, 2008 the financial crisis, and then 2020 COVID. So this is a historic period, and as you point out, we're down another 5%. I would tell you, in the other 3 instances, the Fed stepped in immediately and cut rates sizably. So I think for now, if you go back to Friday, the Fed can talk tough. They have to be looking at this. I don't know if they can even make it to the May meeting before they start bringing rates down.
At the same time, nothing seems to have broken yet. It doesn't seem like things have gotten disorderly yet, despite the margin calls. And there is a real concern about inflation picking back up. How much can you really reject what Jay Powell said on Friday?
Well, you have to reject something he said over the last few years. Remember, they talked about the long and variable lags. So now they're saying they're going to wait for the accident before they respond and then wait for the long and variable lags to take hold. I don't think so. I think if you step back and look at the totality of what's going on, you cannot believe that there's nothing under the surface that's going to break. We already know that businesses in the lower rated end of the quality spectrum have been struggling. When you look at private credit and look at the percentage of amend and extends, it's very high. What happens when their cost of funding just ratcheted up another couple percent and they're going to see top line growth come down as well as their input costs go up? I think this is a serious moment. I do not think the Fed can just sit on the side.
Good take. Jerome Powell spoke on Friday and he very much just continued a rather hawkish etiquette or forecast. No, didn't really give any clear guidance other than we're just going to see how things go, and that's the best thing to do is wait. And I'm almost not for them doing an emergency cut, but almost am at the same time, because if tariffs are to get that literal implementation that the markets are now pricing in, we should do a video talking about how tariffs have gone so far in regards to are they working as a negotiation tool or not. You do see countries, Cambodia dropped their tariffs down to 5% from 35%. Israel, of course, we know the relationship between Israel and the United States, dropped their tariffs to 0%. Vietnam, India in talks with the US. Over 50 countries in talks with the US, in fact, in regards to negotiating tariffs. And then you have the likes of China, you have the likes of Canada that have come out, China actually have enacted some, Canada talking extremely tough, and the EU also making threats. So there's still a resolve to all of this situation, but if tariffs are to literally be implemented, the Fed kind of do need to cut rates, because if you've got a business that has their borrowing costs increase and now they're getting their gross margin taken away from due to tariffs, loss of business, whatever it may be, inflation, if it does cause that, the Fed do need to react. And the fact they haven't already, they're not showing great sort of foresight as they historically haven't done over the past sort of 5 years. So there's a hell of a lot going on. Don't beat yourself up, guys. You're investing in, if you're a crypto investor, the most volatile asset class that there is in the world at a time of more economic and political volatility than I have certainly ever seen. And we truly love what we do because there's never a boring moment in the markets. And for me, I'm a net long accumulator of cryptocurrency assets that I think are going to play a vital role in tomorrow's world and be worth trillions of dollars in terms of market caps. I'm talking about layer ones outside of Bitcoin. Very interesting. Let's look at Bitcoin and let's get off the daily. And I still think, taking a broader view, Bitcoin doesn't look too bad here. I truly believe it, guys. Regardless of that, my concerns are around the stock market and further contagion of this. The S&P is yet to open today, but you can probably imagine, based on the futures, which are now 3% down, how this may open. And that is going to likely drag everything with it. The cryptocurrency markets could have priced in the majority of their move already. I really don't think crypto... I sound insane saying this, guys. I don't think cryptos look bad. If you look at some of my main holdings, like Hedera, this is our shot at accumulating down here. And we'll see. If we go on and making a new low, we can go, okay, we've got egg on our face. But this is crypto. This is how volatile it is. Chainlink's another big holding of mine. Majority of accumulation was here. I'm not as worried as I think many people are. Is it nice to... Let's say you went into this year with 100 grand after December's pump. You've probably got about 40 now. 40, 50. That's not nice, but by the end of the year, you might end up with 250, 300, 400. Plus, if we get some of these as right as we think we're going to. The crypto market, of course, just suffering from volatility. My concern's really about the Mag 7s. Certainly Microsoft I don't like the look of. But crypto sold off to its degree because of $1.4 billion worth of liquidation. If you leverage, you stand to get liquidated and lose all your money. If you spot buy, you can always use the excuse of, okay, well, I'm holding for the future, And that's a terrible thing for me to say, that I'm glad you lose your money. But it should be a lesson learned that people just seem to not want to learn. But please use it as a lesson and stop trading crypto with leverage. I'm yet to find somebody who can prove over a long trajectory, so we're talking 1 to 2 years, and I've sought out some of the best in the business that can show me a profitable P&L leverage trading crypto. If you know any, let me know in the comments section. We can check it out. But I'm yet to find someone that can actually prove that equation. Volume 228. We like to look at CoinShares Digital Report. Digital Asset Fund Flows Weekly Report. Minor outflows of 240 million despite the recent global growth scare. Digital Asset Investment Products saw totaling outflows of 240 million last week, likely in response to the US trade tariffs news that poses a threat to economic growth. The flows were primarily from Bitcoin, of course, seeing 207 million in outflows, leaving the total inflows years to date at 1.3 billion. Blockchain equity saw inflows for the second consecutive week, totaling 8 million, as investors see recent price weakness as a buying opportunity. So do we. Ladies and gentlemen, that's it from me. You'll get through this, all of you. We're going to be here on a daily basis, keeping you up to date with it all. We're yet to see how all this resolves. Is this just a major overreaction? What are the Fed going to do? What's the result of tariffs going to be? These are all questions that need to be asked and hopefully answered in time. But on that note, I'm going to love and leave you. We'll see you in this evening's video. I'm planning on covering the Rothschilds' recent report on crypto. Might make some of you a little bit more bullish than perhaps this price action is. That's it from me, guys. I'm going to love and leave you. Thanks for watching. I'll see you all in the next one.